Agarwal, who is joining us on the show right now. Hi, Sandip. Morning. Great to be speaking with you. First up, this sort of a growth number, which is better than the street estimates, and along with that, there's an upgrade in the guidance as well. How does this bode well for the Indian IT space? Give us your take on that.
Yeah, hi, good morning, and thanks for having me on the show. So, as you rightly mentioned, the numbers were better than expectation, and it obviously implies that the guidance have to be upgraded because we are now in the final quarter. And if the guidance would not have been upgraded, it would have meant that the current quarter would be very, very low. So, I think guidance upgrade is more of a technical thing. The good thing is that the numbers were good, but at the same time, if you see the booking numbers, as you rightly mentioned, also the booking numbers are looking quite poor because it is down 7% in local currency and 6.5% in dollar. And also more worrisome this time is that consulting has not seen such a sharp dip in the order book. It is down only 2.2, but the outsourcing is down 9.8. So I think there is some bit of risk or cautiousness which is there. And when we were hearing the conference call, that was something which gave a very interesting insight. The management mentioned that they think that CY25 will continue to be uncertain. Now, remember, Accenture year-end is 31st of August. So, another 5 months, according to them, will also be weak. So there are two implications of that. One, next year guidance for Accenture, next full year guidance for Accenture cannot be very strong because first half will be weak, according to them, because of uncertainty. And similarly, the whole hope in Indian IT services, which was there, that H2 will be better than H1, that is now also jeopardized because if CY25 is going to be bad, then it will be very hard to recover anything beyond that in the Jan, Feb, March quarter because again, Feb has less number of working days. So my understanding is that there is quite a bit of uncertainty, and because of that, I think there will be some pressures.
Okay, so that's the take on Accenture's Q3 numbers. Sandip, hi, morning. Well, the numbers have been slightly better than expected and the guidance has been raised. It has been only nominally raised. And compared to Indian IT companies, their margin profile is much lower. Do you believe that this nominal increment in the guidance should just be taken with a pinch of salt, or do you believe it could actually create a big ripple effect for Indian IT?
Yeah, so I believe that, this nominal increase in guidance will have not much positive impact. In fact, if they would have said that we are seeing early signs of recovery or there is lower level of uncertainty and all that, I think that would have been taken very, very nicely. But now with this, I think even H2 story of Indian IT looks a little risky. So I will say that, while numbers are good and there is a technical upgrade in guidance, but I think at the same time, there is more uncertainty than previous quarter in terms of commentary. So that will weigh upon Indian IT. And this time, for the first time in last so many quarters, the outsourcing has shown some signs of weakness. So that leads me to believe that there is no clarity and there will be little more uncertainty even in the commentary of Indian IT because they generally mirror what we see in Accenture's case.
So bottom line, IT stocks will not go up, right? Very simple.
They have gone up too much in last 6 months.
Exactly. So Accenture numbers ko ignore karo. Crude per focus karo. Right? Nothing. Do you agree with me? Accenture ko ignore karo, crude pe focus karo.
Because these valuations are not justifying what is happening because, you have one sector, ER&D, which is upcoming sector that can grow at a phenomenal rate. But the IT services cannot grow too much, means it is a 6-7% growth industry. After some market share gain, you can do 8-9% on structural basis. And for that, if you are giving a PEG ratio of 3-4, it is quite difficult to justify that.
Okay. At what point in time you would say IT becomes attractive? Like 3 months ago, HCL Tech was a dividend yield stock. The dividend yield in HCL Tech had gone higher than Coal India, if you remember. Are we reaching that point in IT where suddenly it will be the word value and contra which could be at play?
So in IT, it is very easy to track when it is bottom. When they start postponing the variable pay, when they start, delaying the offer letters, when they start, not committing on the wage hikes. And I think that period was in last year when everyone was postponing salary, wage hike, and all those things. That is the time we were very, very bullish and we went very, very massively overweight on the whole sector. And then, in 6 months, we made very, very good return. And then I think everything has gone again in the euphoric zone. And now we are not so optimistic in near term. Yes, if valuation come down substantially, either through better earnings or through, time correction, then it will be time again to reevaluate. But as of today, it doesn't look like that, there is much offer, much reward here in comparison to the risk.
Okay, all right, Sandip, appreciate your time. Thank you for joining us. Before we take a break, I just want to mark crude